Aloha, aloha, Bubbles stock market show. Continuing the open of Friday, October 17th, 2025, 9:19 a.m. Eastern Standard Time. Welcome back. As we discussed, this is where the game begins right here. So are you on the board? Are you on the board? When you have one of these, then let me know. Let me know you're on the board and play a game with me. Get one of these and play a game with me. We're gonna call it the one share gang. So we'll use this. Got the fundamentals of different companies here, and we got the fundamentals of the Mag 7 here, which I happen to have here in this window labeled Fang D. This is the Mag 7 all coiled up in here. So this is some fundamental data on each one. So let's look at both at the same time. I'm going to open up this window. We have Apple here. Here's Apple right here. Let's open this up. Pull this back up. So we're looking at one thing, which is the stock market. In this case, Apple is the stock market, and then what facet of the stock market? In this case, the facet is Apple, and then what facet of Apple are we looking at? And now in this case, we're looking at two different facets. We're looking at a technical look and a fundamental look. So Apple, so not only can we use Apple and all these other Mag 7 stocks as an overall indicator of the stock market, of what's going on in the stock market technically by looking at the charts, but also fundamentally. And then if we can get a full picture of Apple by looking at both at the same time, the technical and the fundamental, then we have a better idea of this facet of the stock market, Apple. And then, of course, we'll do it with all the Mag 7 stocks. However, in this next couple minutes, we're just going to do it with Apple as far as kind of more of a detail. So Apple, we see a PE of 37. So let's say this is we need a number to work with. So PE, we're going to look at PE of 25 is our general number we're going to work with, but we do realize that um, in the PE analysis skill that you need to factor in different stock sectors as well. So for example, Coca-Cola is in one sector, MO is in a different sector, FCX is in a different sector, and a lot of these Mag 7, they're kind of in like a tech sector type of thing. But in so there's these different sectors, right? And here's oil down here, Exxon. And so each sector could have its own sort of normal PE. But overall, the number we're going to look at before we analyze deeper in is 25, our starting number. So Apple, uh, almost 40. Peg, we're looking like when we get around a one, I guess we're looking for a one peg, around a one peg. How close to a one? And if it's negative, if it's below one, how far away and what might that mean? Enterprise value to EBITDA, we're looking for 10. We're looking as close to or below 10 as possible. And then from there, look at other factors. So overall, this is looking expensive as far as to purchase. If we're looking at these three things, I guess plus this to purchase a to purchase not as far as a trade, but as far as business ownership. And then is this even profitable, right? So what would we be purchasing? We see it's a little high. It's definitely not discounted. It wouldn't be an on sale price. So for this kind of full price purchase, what are we getting? Overall, the bottom line here, profit margin, it's profitable. It's pretty good. Compare it to, let's say, here's here is something in the gold sector. I forgot exactly which one, but 20%. Look at FCX, copper mining, 7%. Apple, almost 25% profit margin. FCX trying to get 8. So um, MO still like 60, almost 60%. We're at almost 25 here. So if you just bottom line, obviously this is taking the cake, but this is a dividend king. What can you say? It's definitely a stock portfolio king. So our one share gang, we can, accumulate one share of stocks like this, and we will look into that. We're gonna have the stock market opening in about 5 minutes. So what these episodes are right now, kind of laying the groundwork of getting everyone acquainted with and coming up with a structure and a format and a jargon communication form. So it would be really easy for you to even catch bits and pieces that you strategically want of information that's coming from the Bubble Stock Market Show to help you in whatever you're doing. So we're gonna be consistently giving stock market information and a little more, right? We're going a little deeper. We're not just going to be looking at what's the Mag 7 doing, which we know they're kind of going sideways for the most part. There are only two going up, and the other ones are going sideways. But we're getting a slower type of look too, slowing things down, looking at fundamentals. And if we see, like right now, profit margin around October for, according to FinViz, is for Apple, 24. And then when we familiarize ourselves with the different general profit margin and statistics of these bellwether stocks, if we see the fundamentals of these, whatever we see the fundamentals of these doing, we're going to look at what is that doing in relationship to the technical? What is it doing technically? And there, it will give us a greater idea of, um, it'll allow us to have our finger more deeper into the pulse of the market. Like sooner or later, the market's going to come down, and sooner or later, the market's going to go up, and sooner or later, the market's going to go sideways. These are the three things it's going to do, and and right now it is it had been going up for a while, kind of a while. Uh, let's take a look at, let's go through these mag stocks. They had been going up for kind of a while, and now we're at a higher, we had been going up, and now we're kind of at a top. And how it can go higher though, that's the thing. It can go higher. Does that mean it will go higher? No. Does that mean it has to go down? No. So we're just waiting to see what's going to happen. And is it kind of pricey? Yes. If you're just looking at, is this a good time to buy stock? Not really. In the way we can have something other than like a guess is to look at the Buffett indicator. You can read about it. This is the website. Go ahead and read about it. Read about it as much as you want. And to get to the point is look at the Buffett indicator. You know, according to the Buffett indicator, if we want to buy stocks as far as like long-term holds, stock is expensive right now. The stock market is expensive. And and so what are we going to do from there? Does that mean what what that tells me is that I'm still going to make money out of the stock market, probably more on cash flow strategies. And I'm still accumulating accumulating shares. And I'm going to lead this one share gang. I'm going to lead the one share gang. Let's take a quick look. Okay, the stock market's getting ready to open. We see overall we're still struggling. It's like there's weight to the downside. There's definitely weight to the downside. Let's switch over here to anything. And this, we're switching over to this because this has been basically my watch list. And then there's been, and this has been my watch list and how I've been watching the market in one window. So I have S&P 500 here, the VIX here. Between these two, I feel like I got a pretty good gauge on what the market's doing. And all right, we just opened up. Did you see that? Oh, I got filled on something. Let me see what I got filled on. I got filled on. I got filled right here. I just bought a share of one share of BTCI at $55.25. It's probably going to go lower. Let's just it gap down. It's probably going to go lower. And this is one that I'm figuring out how to integrate. And so, Bitcoin is a real popular thing to be talking about, and this is how the way that I'm viewing. I want to say I don't really know the right way to phrase it because the whole Bitcoin thing is a kind of an emotionally charged thing at the moment, or it was. I don't know if it still is. But the way that I am integrating Bitcoin into my life right at the moment is I'm building a position in this BTCI, and it gives a pretty good dividend. And as far as being like a one share gang stock, it's like if you think Bitcoin is going to stay around, I think this one has merit to look at. And it's from this company here, Neos Funds. I think the company that if you're going to be investing in ETFs, I think um, I think this is a good time to get familiar with the different companies bringing instruments to the market. And let's pick a different word for them, not instruments, because that instruments might give it too much credit. Because I think it needs to be more a like we should be looking at it as a commodity, a company bringing a new commodity to the market, and they're bringing it to the market, and uh, they are wanting to entice us to buy it. That is what they're doing, right? That is what they're doing. They're not, they're investing in a fund company. They're running their own fund company. So look at the different ones, right? Is the ones that started off with like Yield Max does Yield Max do they have anything coming to the market that uh, gives you the like what are they bringing to the market? I don't know. I haven't really looked at them. I've kind of been more focused on Neos, and that was a time on YouTube where I don't know if it still is like this culture, but it was definitely a culture, and I learned quite a bit from there. And overall, I think integrating in these high yield um, ETFs that came about because of changes in either laws or SEC regulations that allow e companies to make ETF products that are basically option trades, right? So you can either do the option trade yourself or you can outsource the option trading. And that outsourcing has kind of, in a way, has become commoditized. And I wish I would have been on the end that was selling the ETFs. I'm sure Yield Max and all these companies have made a lot of money, and they're still making money, and the Wild West is probably taming down just a little bit right now. But Bitcoin, in itself, like I guess with BTCI, we're banking, or if there's a bet or if there's a gamble, the bet or the gamble comes from two places. Number one, what what's going to happen with Neos? Is Neos going to stick around? Are they going to stick around enough to, number two, gamble, deal with whatever is going on with Bitcoin? So when we think about whatever is going on with Bitcoin, it it seems to me that it's true that there that Bitcoin, let's say at minimum, is not easily going away. So because of that, if that's kind of our core assumption, that it's not easily going away and that there is sort of like a movement or a inherent thing, like what Bitcoin, part of what Bitcoin is this kind of um I guess since it's this computer system, it's people kind of like banding together, and somehow it's its it's its own thing, like almost like a movement or something. And that's why sometimes I think it can go into this like extremism type of thing, or maximalist, is that what they were calling it? I'm not sure, but that it does give a feature to longevity, into like a network staying there, because that's the power, is the network. Like, so you know what? And I became a full-time trader, and I'm adding. That's why I bought it. I just bought a share of this, obviously. But again, this is not financial advice. And what this is I'm I'm attempting to set up, and I should take out the word attempting, because I am setting up the foundation, the framework for us to be playing a game. The game is the stock market, right? And I'm going to format this enough where it can be measured. Like, what are you bringing to the board? Are you on the board? Now, what exactly you're going to be putting on the board? Is it going to be your personal financials, or is it just going to be stock trades? You don't necessarily, maybe we'll see. We're formatting it, right? We're formatting it, but this is definitely a game. And the more you would play the cash flow game, the better, the better, or the better you can understand how that game is played, then you'd be able to understand what I am simulating, or what I am emulating, what I am creating. So this will be a more realistic way of playing it, but it's still the same thing, right? It is still playing the same thing. This is it. These are your expenses. These are your transactions, I guess. So that's the actual expenses, and accounts. This is how much you have. This is how much is going out, and I guess this is where you can have a asset column, an asset part in here if you want, but we're using the stock market, so this is where I was. Like, my assets are already kind of organized over here, and obviously there's other type of assets, but we're playing the stock market, right? We are playing the stock market. So putting your other assets, like business, or you bought royalties, you have books, you bought a business, you built a business, you inherited a business, whatever the case may be. But okay, so I got filled on that, and now I have a total of 26 shares. And at some point, I'm going to stop saying how much shares I have, and I'm not the type of person that really is wanting to do that. And to some degree, we have to have some sort of transparency here, though, if we're going to be playing a game. And so I'm figuring out what is that level of transparency that I'm going to be doing here to bring to you the enjoyment of playing this game. We're going to be playing together. That's ideally what would that is what will unfold. That is the ideal, that is the vision that I'm holding. And I don't see why it won't happen to some degree. At minimum, someone is going to watch this video and they're going to say, you know what? That seems kind of fun. I'll do that. And some other people would watch the, and then over time, maybe they'll really start figuring out, oh, this works. Holy crap. And some other people might say, like, in the beginning, might see the, that if everything starts here, and then you're like, okay, everything starts here. Well, what is it? You know, things that I have to pay for, expenses, cell phone bill. And then after that, we got to figure out ways to generate money from here to come up with that. So let's do an example of that. And so here is one little example that I just bought one more share. And let's take a look at, let's take a look over here. Now, again, I'm not a financial advisor. I'm obviously, I know it's completely obvious, but I am doing this myself. It's obvious to me that I'm doing this myself. Like, this is for education. Like, you really need to learn this stuff. Okay, and part of how you learn this stuff and before and to make yourself educated when you talk to professionals and other people helping you and to give yourself clarity, you know, mental clarity. Um, Go to a funds page, like in this case it's NEOS, under their ETFs. Here's the ticker symbol, BTCI. And one reason why I like this because I only have stock brokerage accounts. I don't have any crypto accounts, and I'm using Schwab primarily. And the most I think action I can get into crypto is like futures and ETFs. So I think this is pretty cool. And I'm more of a cash flow type of guy, anyways. So let's go down here to distributions. You can look at all this information, but what I really want to know real quickly, distributions. Click down here. Let's find today's closest to today's date. Okay, the last distribution was $1.30, and there's going to be another one coming out. Today's the 17th on the 24th. So for one share last month, you got $1.30. That means 100 shares, you got a dollar. You got 134 bucks. In the past, I used to average $1.40, but maybe it's more conservative and a little safer to average $1.30. $1.30 to $1.40, $1.35. In a few months, towards the end of the year, beginning of next year, we'll see what their distributions have been and what's a reasonable number to calculate. Um, but if you think Bitcoin is not going away, and if you think NEOS is cutting enough, innovative enough, and conservative enough to stay in business and continue to create to trade options in a manner that can be suitable to whatever requirements to meet the ETF standards and keep this ETF in business. So it's like you're betting on Bitcoin and you're betting on NEOS, NEOS specifically keeping this ETF in existence. And at the moment, I'm betting on it. You know, it's like I'm betting on it. One share at a time, though. I'm taking it kind of easy, you know, because I already have a pretty big position in XDTE, which you don't see it on. I don't think you see it on this board right here, on this in this in this chart. But what we can do is, let's say if you were more excited about Bitcoin and you research NEOS and you think NEOS is cool, now here's where it gets a lot more fun, right? We can buy kind of one share at a time, which we see that it overall it's been going down, and it's probably, you know, these these ETFs, they have a tendency more to go down. At least as far as on the price chart. So there's this thing with those ETFs that people will talk about of total return, and I'm not sure which side of the fence I'm on. I see it's a little more of a nuanced conversation though than just simply saying, "Hey, the price went down," because you are getting this like healthy dividend distribution. And then the other thing to consider um, is It's more of just having a place in a portfolio. Not that this is your portfolio. Like if this is your only strategy, I'm not sure. I'm helping my friend build a portfolio, uh, and it's we're really building one share at a time. That's why I came up with the idea of the one share gang because I'm really looking at doing that, and it made me want to do it too. And I think that if you, it doesn't mean that you don't have you. So here's the two things about a one share gang. The first thing, and that makes it nice for everybody, is like it's the easiest way to enter the game. I mean, because around $55 you're already playing the game, right? $55. You're at about 70 for Coca-Cola. You're at about 65 for MO, and FCX. You're at about 42. And within 30 days time, you had a chance to enter MO around 35, which is sorry, FCX around 35. And and so like with $100, you're able to play the game. Now, if you let's say you have a lot more than $100 though, this is still a good way to learn the game because if you cannot make money on one share, because the stock market's scalable, if you can make money on one share or one option contract and consistently, reliably pay your bills and live your life, at least, yeah, on one share. It doesn't mean if you say, well, my bills are more expensive than that. Yes, but what I mean, you're profitable on one share because this is scalable. Then any number is okay. You can scale up to whatever number you want. So if you have $1 million account and your $1 million is sitting there and you learn this on one share, then when you put that full million into play, you're going to be razor sharp. That's what it does. One share at a time, one contract, you have to become sharper. And the learning how to be profitable with the minimal amount you can makes you really, really sharp. So your percentages, ROIs, everything is going to be better. Everything is just like gets sharper. So and also you don't have to pay more for that. You can get way more skilled, way faster with going one share or one contract at a time than than you would or it gives you the potential to more potential to do that. Now, one thing that I'm watching, I've got an open position, a short strangle in now, and this one, this one definitely you do not want to be doing short strangles on something like now without having first become really proficient at selling cash secured put options. So uh, yeah, because like right now, even if you were to, which this video is not live, so yeah, even if you were to watch this during the market time when it was open, it wouldn't be an ideal time to put it on. I put on this position closer to Monday than closer to Friday because this is a pure theta trade for me, baby. I love this. And this is why I decided to publicly talk about just this one though. I'm working on I want to I want to add other tickers to my stable of short strangles, but it's all starting with now. It really is. And so I have sold a put at the $850 strike price, and also have sold a call at the $970 strike price. And let me take a look at something here. Oh, I'm gonna pull this up on the under the Analyze tab on the Risk Profile sub tab. Let me take a look at detaching this. All right, so here Here is what I have, my actual trade I have on service now. And what I want to point out to you is see the zero as you go up here. This is $1,000 a profit. You see this right here? This is $1,000 a loss, right? And so the first thing I want to point out is look at my max profit. It's low. It's not even close to 1,000. My max profit is $235. So that's it. That's my max profit. Now, the next logical question is what's the max loss? Well, if you look here on the risk profile, you see how this extends down this way and this extends down this way. That means my max loss is infinite. But technically, it's not infinite because, well, on one side, maybe it is infinite. And yeah, so I guess with this particular trade, it's showing you that I have infinite risk. That might sound really, really scary. And in this case, the reason why it's not really, really scary is because this is what we are learning to do is to manage risk. And so if I really felt like I was taking infinite risk with this trade, I wouldn't be doing it. I wouldn't have chosen this particular ticker because I'm looking for a ticker that, yes, in theory, um, the setup on the risk on the risk profile shows infinite loss, but when I look at the other facets of the other facets, I'm seeing that it's the likelihood is low. And so let's dive in a little bit of how we can use this. But we know my max profit is 235. Actually, let's stick with that. The max profit being of 235. And I'm going to change on a different computer over here. I'm going to change it from the market. I'm taking I'll take a quick look at the futures market right now for stock market. Gold has pulled back a little bit on the futures market. Silver's pulled back. Bitcoin is kind of like catching some support, and oil still kind of moving down, trickling down. The VIX futures really pulled back, hit a high almost 28. It's around 23 right now, pulled back. So it looked like this kind of topping spike. Obviously, if that would have been a really good time to sell options, the more we can time our option selling around these VIX spikes, the better. In the stock market, it's still, kind of in the middle of, it's struggling to stay in the middle range of that big pullback that we had. So I want to switch this over to the anything tab. It will allow me to quickly I'll just keep my eye on the S&P 500 because here's my open position, as I was mentioning. Now, reading this graph, reading a risk profile or yeah, risk profile, risk graph, uh, um, it's a bit of an art form, just like the charts. However, it's worth it's worth doing. That's really it. It's so worth doing. The charts, the risk profile, the option chain, the fundamentals. These are all different facets of the same diamond. The diamond being the stock market and or a trade, however you kind of want to define it. But we're looking at this. We're making money in the stock market. Our goal is to make money in the stock market. The stock market is sort of an abstract thing. So there's these different abstract ways of looking at it, but we're looking at the same thing where we're gathering information from a different angle to see what decision we want to make. And so what I will do is I'm going to move this right here. See that number? See where I'm changing here? I'm going to move that to, hold on, let me just double check. 970. 970. So this is my short call, 970. And now that I did that, I want to make sure I hit the tab button. Why specifically tab? Because one day I was on I called Schwab. Someone came out of my computer helping me with Thinkorswim and specifically with the risk profile. That's another reason why Thinkorswim is awesome. Quick history: Thinkorswim was originally owned by what the company that created it. That company sold it to TD Ameritrade. TD Ameritrade ran it for a long time, and I think increased the awesomeness of Thinkorswim, and then sold it to Schwab, and now Schwab is running with it. And I would say I think they're increasing the awesomeness of it. I feel like the futures buying power was a lot better under TD Ameritrade, but overall, I think as far as the stock market, I think it's becoming a lot better. So so Thinkorswim, it gives us these awesome opportunities. So and with Schwab, you can call and ask for help, get someone to help. They can share your screen and they can walk you through stuff. They can't help you make a decision though. You need to be so you need to be able to talk to them in a way. I think there's kind of a skill where they don't feel like you're trying to get a help making a decision. They don't feel like you're trying to get like a financial advice from them. You're just getting advice on how to use the software. And I in to defuse them sometimes and help them like see if they're going to give me as much help as possible. I'll let them know like what decision I'm trying to make. Hey, I'm trying to do this with Thinkorswim so I can make this decision, and sometimes they'll they give a lot more information when they see that you legitimately are trying to think for yourself. Just learn to use the tools. So tab, that's the moral of the story. So now here on the bottom one, let's uh let's change this to 850. And then, okay, 850 tab. All right, so now we have, you see it moved this over here, it's right at 850, this over here at 870. So right now, this form of analysis is putting a probability of it closing below 850 at 2.32% and closing above 970 at 0.42%. Now, if I wanted to, I could add up these two numbers and then know the likelihood of it staying between these two numbers, exactly. I see it's like kind of close to 50, but here really for me though, it doesn't matter. It really doesn't matter what that number is because I'm I'm when I placed this trade, I saw I'm getting if everything expires worthless, which this also assumes I don't roll in my strike prices closer, which is a something that we can do in order to make a little more money. But without any change to anything, I'm making 235 dollars in a week. That's the thing is like this is a weekly trade. This is a cash flow trade. And so this is kind of the low end. There's ways that I can make more money than 235. And so I'm dialing it in and that is what we're doing. You're you in like something that you could paper trade, work on, but using real money with what I'm doing here, you can do in the future, but you should not do if you cannot successfully for like a year, if you haven't been doing um, selling cash secured put options successfully, happily, profitably, and moving up the skill level from there, you shouldn't be doing this trade. This is something This is putting a cash. This is putting like something like a successful cash secured put option on the side, a successful covered call on this side. But here's the part. there's no cash secure and there's no covered. So you know what there is? There's unlimited risk because if it was cash secured, you wouldn't see it on the risk graph. At least on this risk graph, there's no way to like click a button and show cash secured, and then it would go boom. It would level out here. But technically, it should still go down because in theory, the stock could go to zero. Okay, great. Then have it show it cash secured at expiration, and then like part two is after expiration. But I think close to the same thing on the call side, but not exactly. You know, there's different nuances, but it's like you're putting together two successful trades. And just a quick side note, this color here, from here to here, that's like one standard deviation. And this one in the middle, that's where the stock's currently at. So I could roll this price. I could close this one. There's something, there's something specifically called roll it, and I'll just show it to you. I don't really want to do it though, and I'll explain to you why I don't want to do it. But let me see if I can at least show it to you somewhat of what it looks like. All right, so usually I'll have some stock prices here. Oh, bonkers. That's not what I wanted. That's a strategy book, yes. Boy, it's not okay, I'm having a hard time figuring out where I need to detach the option chain at. Sorry about that, but I like to have the option chain here. And so right now, this is would be showing, okay, I'm buying back this one plus, so that'd be closing that. This is the one I have already sold, and I'd be buying it back. I sold it for 175, and I'd be buying it back for about 12. You know, roughly about 100 $160 a profit, and then I would close that, and then I'd buy another one closer. Although actually, the way it's set up right now, I'd be selling another one. So I'm buying to close here, and I'd be selling to open another one. But the way it's set up right now is in a week from now. But I don't want that. I'd be looking at rolling it up today, and I have to change the price. So now I'm dealing with the same expiration. Now the price, I can move it up. But look at this, if I move it up to 75, I'm at a debit. Oh, that's going further away. That's not moving up, that's moving further away. How about at 60? Okay, you can get a $82 credit. And then what's happening though is we're taking on more risk, right? Because we're moving this line closer this way. So now it's would be over here. So it's changing our change this over here. I guess a way you could say it is changing our line in the sand, right? You don't cross this line. If it doesn't cross that line, we keep full premium. However, look at it. It's adding more risk. Now, that's one way it adds the risk, but also on the buying power, margin required to keep it open. Look at this, 17, 17. That's if it were to be all the way down here, if it moved. down there. And right now it's taking around 13, right? So it starts increasing the buying power. So um, that's the other thing to consider when rolling as well, is like where's your buying power at? And at the moment, I have my buying power, I think, kind of maxed out. I probably could roll it, but I would really have to focus on rolling it. And obviously, I'm recording this video, and so I'm more focused on doing that. And I didn't really plan on rolling it this week. Like I opened up a lot, some long-term positions the week before, and so I want to kind of see where my buying power is going to play out at over the next like week. So this was 1 week, and I put on this trade. I'm gonna work this trade, and also work um, work on some directional stuff. But the reality is my bread and butter, where my most experience is in selling options. So I need to have a certain amount of focus, even though I have a strong desire to get a trade that's as lucrative for me with direction is selling options. That is burning inside of me because I realize how much money I will be making. The thing though is that the skill, it's where the money is made. The money is made from the skill. So if I shortchange or try to shortchange developing the skill, then my chances of making the money decrease. So there's less of a rush on making the money, and there is a big rush on gaining the skill. And for me personally, moving from Hawaii to the Eastern Standard Time was a a commitment in that direction that I realized for a long time. I think that I could do this for a living. If I lived in Eastern Standard Time, it'd make it a whole lot easier of doing it for a living. And then it got to a point where I'm like, oh, I had so much rain in on my monthly bills, and I'm living in a place that's really expensive, and I'm like barely spending money. I was not homeless. I had like a nice apartment, great pool, great great sauna, great weight room, great location, great management, great parking spot, great in unit uh laundry, and laundry in the building. So yeah, it was great. It was really great. I really, really love Hawaii. I love Hawaii. And I love the stock market. It was I had 25 years of Hawaii, and uh you could say 0 years of the stock market. And what I mean by years of how many years have I been trading full time? Not 1 year yet. I'm like getting around making around 3 months. My life has just kind of been getting reorganized, and I think I've been living here now for about a month. But I started, I think August. I think August, beginning of August is when I officially in Hawaii started trading for a living, and then I moved at the end of August over here. So I don't have 1 year experience yet in yet, um, and I'm just at the beginning of this journey. But I'm happy to report to you that I have every 5 days a week. I'm putting some effort into understanding taxes and structuring my life in a way that I'm everything is good with taxes, and looking at different trades and the tax law and trying to strategically make a huge difference in my life in 5 to 10 years down the road from putting on long-term trades right now. And with this big spike in the VIX, it's been a really good time to do that. And so, but also with a spike in the VIX, also seems like it comes in a spike of required buying power for things. So so I'm really kind of seeing how my buying power is going to go instead of focusing on making an extra 80 bucks. Well, maybe I will. Like one thing that's good, I'm trying to avoid any trades before 10:30, like 1 hour. Give the market 1 hour to be open. Speaking of that, okay, we looked a little bit we didn't really do too much on that or this. I'm deleting this out of there, but we got just getting acquainted, just getting the show going. And we'll go through here real quick. All right, so S&P 500 via SPY. We see that it's trading in the middle of this bar, right? And we see that's this white moving average is below that. Does that mean the uptrend is done? Um, I don't think we should say that because we're only looking at a 3 month time frame. So that's one thing. So on a 3 month time frame, and we see a lot of the Mag 7 stocks, 5 out of 7 are moving sideways in the last 3 month time frame. So, like we could see some sideways action here. But you know what's cool about sideways action? If you are a proponent of the market being a higher number, sideways action is not down. So next we have the VIX here. We see the VIX hit almost 29 today, and it's down here. But the last 3 months been a big spike up, which brings in a quick, um, not discussion, but a quick introduction to the concept of buying calls or debit spreads on the VIX as a strategy. And then IBIT, so we're iShares Bitcoin ETF, and it's going to give us an idea of what the price of Bitcoin is doing. And from a brokerage account using Thinkorswim, allow you to profit from the price action of Bitcoin. It's similar to, we could substitute GLD in here, and that's the same thing. We're doing the price action of gold. So that's great. You got two things, and then BTCI does not have nearly as good of an option chain as does IBIT here. IBIT has a great option chain. You know what's great about trading this as well? No earnings. It's really volatile though, so you plan in strategies like if you figure out a way to trade this where you're harnessing volatility because it is volatile. But it has a good option chain and no earnings. You don't ever have to worry about earnings. Same thing with this. You don't have to worry about earnings. Gives a pretty good dividend. We went over the dividend. We think you still got it up here. Bam. Where's that distribution? I don't know, but I don't know where that distribution is, but you can look down there and find it. We're averaging about $1.30, $1.40, $1.35 a month at the moment with that from a company that seems pretty good. And then now we talked about that. Talked about that. I got my short strangle on that where it is. Yeah, it's overall it's behaving fine. Seems to me like just going to expire worthless. I'm going to keep the premium, and I'm working on um, collecting some premium to buy some stuff. I'll tell you about that later if it makes sense. Crowd, CrowdStrike, uh, playing with this one to learn how to do that. Coca-Cola, I think around here in the $66 price. I wish I would have bought more of Coca-Cola. And MO, what's a good price to buy MO at? And it's Coca-Cola. I think that's a relatively good price, but MO and Here we go. MO, super profitable. I gotta add the dividend. My apologies. I still haven't added the dividend, and that actually is a pretty big decision maker, especially for these two since they're dividend kings. And I think MO, like almost any price right now is a pretty good deal, actually. If it's I would try to be a little more finicky with Coca-Cola as far as overpaying, but MO seems like it's of course if you got it lower, you maybe getting a better peg ratio, but the PE is already really low. It's basically a 10 EBITDA. It's super profitable. Yeah. Yeah, probably anywhere like let's say 65-ish. But right now, maybe you might think at first we'll have some opportunities to pick MO up on a deal if the market crashes. Maybe, maybe, but sometimes what happens is like see it's been kind of going up through here. Sometimes what's happening is money is moving into these as like defensively because they're these kind of safe harbor stocks. But I would say look for pick up at anytime you can. So Freeport, FCX, kind of looking sideways right at the moment. Wish I would have got more on here. I was short a $40 put option right when this was the week this happened the week of my expiration date. I rolled that. I was like, man, I do not want to buy it because I just saw how low it was going. I was like, I did not want to be paying $400 right now. So I rolled for a credit at a lower strike price. Now I'm at a strike price of 28. I got 28 and 50 short puts 50, 28 and 30. 28 and 30, not 28 and 50. All right, so I'm short puts at 28 and 30. Way better. Way better down here, which I think is still, a good buy, but buying in bulk of 100 and overall, it wasn't just the buy, it was like the timing of the buy. I I want to be acquiring more assets. I like the one share gang idea at the moment for myself because I want to keep as much cash on hand as possible right now since I'm just beginning this journey of trading for a living. And SMCI. Let's see. All right, it's cup and handle type of thing. I think at some point it's probably gonna run up back up to in this area, and if it stays going into the next week, if it's still looking like it's like this and it hasn't had some big movement, we'll look at what the other stock market's doing. But I'm gonna keep looking at how to put a position on this because I think even if I just buy one share, I think at some point it's going to be at least hitting back up here around 60. And if I can pick it up down here around 53-ish, 53 to 60, even one share, I'm good with because if I have that share and I'm planning that out, then that gets me a little more pinpointed. Then I start looking at the options too. So I can add on some option, long option exposure, see if I can crank out like somewhere around 60 deltas. That's really like maybe dialing in 70 to 80 deltas would be better. Actually, if you got one share for pinpoint accuracy and you make you knowing, okay, I'm gonna get like $8 movement, what can I get out of what if I get a $5 movement on the option out of that eight? Maybe you can get a full 8 8. I'm not sure. I'll see. But definitely there's ways with options just to figure out with low amounts of capital low amounts of capital. So to use low amounts of capital, though, one thing that you are taking an extra theta risk. and shorter term options. This one might be doing the same thing, setting up to boom, hit higher up here. It's probably going to test to 100 again. We get down here at 84. Tesla, same thing. I mean, I wouldn't be surprised if sooner or later it hits 470 again. But you know what? It's not hitting 580 where I rolled one of my a few weeks ago when I first moved here. I had short strangle and I had to roll the call and the put on Tesla, and that's going to be expiring next week. But I'm far away now. I had to roll it out I guess I didn't have to, but I did. I was kind of in a bit of a panic. I rolled out the 580 for a credit, and that's nice. So that's the other thing I'm waiting for is these some option strategies. Some of these I put on. Um, uh, yeah, I got some still that I'm dealing with that I put on when I lived in Hawaii, and I was you know, trading put on Hawaii. Now I'm in a different situation. So some of these trades that I have on that are using up buying power that are like longer theta trades that I put on, um, maybe like 3 month trade or something like that. Uh, those 45 45 days, 60 days, anywhere in there, 3 months to like 45 to 90 day DTE trades that I put on in while I was living in Hawaii. Now they're, coming to a closure. Like one of them expired last week. One of them closed out. So it's changing around my buying power. I knew that was happening. I loaded up on some like long-term leap trades that use certain amount of buying power. So I'm getting accustomed to, how is my buying power going to fluctuate with my new buying power usage for these leaps that I put on. With hindsight, it would have been better to time them a bit and put them on today instead of last week. But with hindsight, yeah, I see I should have waited, and which is great. It's great to it's great to be learning. It's really really great to be learning fast. That's it. The faster I can recognize mistakes and make corrections, then the better it'll get. And that's one reason why I'm really just at the moment of being forthcoming, I guess, on this recording and attempting to get some just get familiarity out there, get some thoughts off my mind, and just get a recording out there. Honestly, I'm really slacking here. All right, so I think FCX was in there twice. All right, Palantir. There's that Oklo. What was going on with Oklo? Probably gonna do the same thing. I think it's gonna hit back up here again. Right, this is one that's it's already moving up there again. So that's one I want to do more day trading on. I want to work in like a day trade, swing trade routine. FCX. All right, Palantir. This one's probably going to hit new all-time highs. I think sooner or later this will probably hit 300 bucks. Is my guess. And so, there's a lot of different ways to, if you think Palantir is going up, which I do, there's ways to put long positions on without needing to actually buy the stock or buy something. You can you can profit from a long thesis through a theta trade. And actually there if you theta trades are the easiest trades to pay your bills with. For example, let's say that you have a $50 bill, $55 bill. We'll use 55 because my phone payment used to be $55 a month for my cell phone. I lowered it to 45, but we'll stay with that number 55. $55, right? And then it's a $55 payment, and so we're gonna generate money out of the stock market to pay that. However, one thing that we just want to keep in mind, now things might not play out like this, but as far as being good game players, being aware of different aspects of the game, we want to realize that since we're going to be generating money out of the stock market to pay that $55 phone bill, let's let's kind of account for tax because sooner or later tax needs to be paid on that, right? And that money was spent. So we're gonna look at $55, and then we're gonna multiply that times 20%. We're gonna add. Let's factor in an additional $11. So 11, oh boy, 11, $11 plus that 55. So $66. So we're going to look at how can we generate at least 66 bucks. 55 for the phone bill, 66 to kind of cover, have this kind of tax buffer. So somewhere you would mark this down, and that somewhere is probably going to be somewhere in here. It would be pretty helpful to keep track of that. And so you're keeping this running number of how much money you've been withdrawing out of your account to pay bills with, and that 20% that you're setting aside, maybe you just keep it in your cash on hand in the brokerage account so it adds to your buying power. So your buying power is slowly going up. And then you'll have this tax bill due every year, whatever, that boom, your buying power will kind of go down because this money that's been stocked up to pay tax, to help pay tax. Maybe there's ways to do your taxes where you have to pay less tax. But the worst thing is to not have any tax reserves when you need to pay tax. That's not good. So 66 bucks, right? We're looking for 66 bucks. And let's do it through a theta trade. So here are a variety of stocks here. And what it's really with theta trades, what's really crucial is that you do this, you put on your trades appropriate to your make your position size appropriate to your account size, which might mean if you have a small account, which might mean that you're doing paper trades to learn as you're building up the size of your account. And look at, as we talked about earlier, making money with the lowest with one contract. So it's like wow, you're really going to fine tune your skill. Something that's a bit on the lower price that uh, theta trade. Okay, so with the easiest theta trade is a cash secured put option, which means you'd have enough cash to buy 100 shares of whatever stock you are committing to do, right? Makes sense. And if you have a $10,000 account, you can easily start this. If you have a $5,000 account, you can start it not as easily, but five is in the middle of 0 and 10. So let's just go with the example of a $10,000 account. And anyone that has below a $10,000 account, um, pay a lot of attention to the one share gang type of strategy. So with a $10,000 account, we were talking about let's stay away from this one because this one overall, let's look at Dividend Kings or like FCX. Let's just look at Dividend Kings. Keep our life real simple. We have a $10,000 account, and they're both in the 60s. One closer to 70 than the other one. Let's look at Mo because overall it's just a better deal right now, right? If you don't remember, let's pull it up. Here is Mo, here's Coca-Cola, and overall, we're as far as buying, if we're looking at buying a business, this is the better deal right now. This one is it's kind of higher, it's higher, it's not as good of a deal. These these numbers need to be lower, right? See how these numbers are lower? That means this is a better deal. And this is technically a more profitable business, and it does give us more of a dividend, um, but dividend stuff I gotta add to that. So let's look at Mo. Now, we can also eventually look at the different option chains that we're uh, that we're dealing with. I gotta figure out a way to detach this option chain. Is that does not look like an option chain to me. I had it detached the other day, and now it is not. And this is really putting a damper in my wonderful video here. Yeah, it sure is. Heck yes. There we go. Boom. Finally. Holy moly. Yeah, that was. I guess I need my own how-to video on how to detach the option chain in Thinkorswim. All right. So we're looking at oh yeah, MO. How can we make 55 bucks? MO. Right here, I mean we know that almost any price around here is a good price to buy. This is a good price to pay for this business. And here we have a 20-day contract that we could sell for about 100 bucks. Right? If we're happy with this price, we're getting maybe we could get 150, 100 or 150 bucks. So if we wanted like less chance of getting assigned, we're looking for 66, and here is 100 to 150. Now, why are we being given this 100 to 150 bucks? The reason we are being given that is because we are legally committing to purchasing 100 shares at either $64 or 63. That is the benefit we are giving them, the peace of mind. They know that we're there to do that for them for this time frame, 21 days, and because we're doing that for them, they're paying us around 100 at the 63 strike and around 150 at the 64. Why $50 more at the 64? Because there's a higher probability that it will it will end it will end that expiration date on the close of business that day. There's a greater chance it will be below 64 than 63. I get it, they're kind of close to the same number, but that's how it works, right? Every number lower is a little less chance. It's a dollar less. And it's pricing in about a $3 move. So it's currently trading at 64.40 minus $3.30 minus $3.30. So it's pricing in around 61 that it can move all the way down here. So if we sell this, we really need to be clear and happy with the fact that we could be buying 100 shares at this price, even if it's trading down here. We have to be happy with that. Now, I mean, as far as like getting a good deal, yeah, it is. It's a good deal. So that's how you can strategically create financial independence in your life. You need a lot of organization though. So that's why I was saying that all starts here. It really starts with figuring out what your monthly bills are. It all starts here. It starts with figuring out what your monthly bills are. And sometimes that takes time. It might take you a month or 2 months, or if you have some bills that you only pay quarterly, it might take you 3 months or 4 months, and then it's like, oh shucks, I paid for that. That's right, I forgot about that, and it's this number, and is this number going to be the same next quarter? So it might take you some time, but it is 100% worth doing. It is worth doing. So with that, it's the market has been open for 1 hour. I'm gonna look at whether I should roll the my position on now, or what I should do with those things. But and I definitely will be back later, later on for a closing video. And if it's any good occasion comes up, maybe I will make another one while I might practice some YouTube lives. But with that, have a great day.